I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
What's the story with the U.S. dollar? Because, of course, the whole world still depends on its international trade on the U.S. dollar. So what's going on with the greenback?
Well, it is rallying. I don't remember time runs together, but I think it was in, early this year, you asked me something to the effect, what are one of the trends? What's one of the things we're going to see in 2017 or 2018? And I said, well, one of the big surprises, I think that's what you asked. One of the big surprises would be the bottoming of the dollar, I thought. And, as we moved into January, February, that bottom was in the making, and it's gotten off to a slow start and still really hadn't gotten, a whole lot of traction, but it is developing. And the bottom, there's a major bottom in the dollar, which is completely contrary to everything that you're hearing. But here it is. It's developing. Also, when you look at kind of the dollar in reverse and look at the technical indicators and the cyclical picture, looking at the euro, there's a major top in the euro in the making. So I think we're on track. It's kind of, like I said, this whole turn point that we've been at really since the fall of last year and into early this year, and still there really. It's still a transition going on. I think it's largely centered around the bottoming in the dollar and peaking in commodities, which I think is still in the making. With the major top, the 3-year cycle top in the commodity markets.
Tim, what do you see happening with U.S. interest rates?
Well, contrary to popular belief, I see a major bottoming trying to take hold in bonds. And when I say in bonds, in bond prices. So what I see happening or trying to happen is a bottom in bonds, which means bonds rally and rates actually move lower once again. That's the way it looks at this juncture. Bonds are still in the early side of that transitional phase in this bottom. I think it's going to take hold, and I think what we're going to see is one final in bonds. There's a dominant cycle, the 3-year cycle, and I think what we're going to see is one final 3-year cycle up in bonds, and then I think that bubble will prick too, is my expectation, and then from there, I think we'll see a collapse in bond prices and higher interest rates, but I don't think we're there yet.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com. Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Tim Cyclesman Wood. Tim, what do you see happening in the major equity markets?
Well, it's a slow process in the making with equities. I think we talked about it, there are some cracks that we have begun to see. If you look at the structure, what happened with the industrials is back in February and then into April. There's some structural deterioration that is warning of a topping process. And then when you look at some of the sectors, underlying sectors, you see those same structural cracks. Has anything, do we have I'm not trying to say that it has come together yet in a big way. It's like it hasn't confirmed, but the cracks are there now. I see them. Now, some of the sectors, I see that, the cracks are pretty obvious. They're almost carved in stone. But on the industrials themselves and most of the mainstream averages, no. There's some cracks with the FTSE. There are some cracks with I've talked about this before. Nobody really watches or cares, but there are some cracks with like the Tel Aviv index. I don't know what's going on there, but I've been watching that for quite a while, and there's something's up. There's a warning there. And then when you look at, like, I've talked about this before too, but like the Amex versus the Dow Jones Industrial Average, well, all this stuff moves together. Back in 2007, it all topped together and all went down in 2009. It's all rallied together. It all moved down into, the cyclical rhythm, all moved down into the 4-year cycle low in late 15, early 16, and then it all rallied together. Well, why is it that the Amex hasn't confirmed this advance? Why is it that the Tel Aviv index hasn't confirmed this advance when they have with all the others? So there are some warning signs, is what I'm trying to say. And then when you look at some of the subsectors, there are some cracks structurally there. So I think that it is a process that is underway with the top, but it's a process, and looking at the industrials themselves, because of some of the structure that is in place there, they're in kind of a peculiar position, vulnerable position, and but they just continue to linger. Like I said, it's a process, and I do think there is a top in the making in equities.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, gold, we have divergent points of view on it. It's going to go higher or it's going to collapse. What's your point of view?
Well, my point of view has been on gold. It's been real simple, looking at the statistics. We've talked about this, that was the 9 years, there's a long-term cycle in gold is the 9-year cycle. Was the 9-year cycle low still ahead, or was it back in 2015? If it was in 2015, it would have been way early to have been a normal low based on all the statistical. It would have been the first time ever for that to have been a 9-year cycle low, based on the cycle counts and just the sheer duration. If you just count the years, 1, 2, 3, 4, 5, So it didn't appear that it was. Now I'm starting to lean toward that, hey, I'm starting to lean in that direction that it was. But the problem with that, and I said, or have said all along, that the most bullish thing for gold would be for it to collapse into the 9-year cycle low rather than the 15 low prove to be the low. And like I said, the jury is still out just a little bit, but I'm really starting to lean toward the 15 low having been the 9-year low. But that's not good, because I don't know if we talked about this or not in the last interview. Sometimes I can't remember what we talked about. But if you look at the base metals, I mean, every metal since the 2015 low, the rally associated with the advanced side of that low, if you look at lead or tin or zinc or, lead outperformed gold. And so, it's hard to spin that, to me, positively, that this has been a very bullish 9-year cycle advance when the fact that it occurred early, or possibly occurred early, I should say, is definitely an oddity. But look at the performance. Why is it that the gold stocks, the XAU, the HUI, have so underperformed gold? That's not typically the norm for a healthy 9-year cycle advance, the advancing side of a 9-year cycle coming out of a low. So there are some major problems with the square peg being driven in the round hole with the 15 low having been, or possibly having been, because it's not 100% confirmed yet, the 9-year cycle low. That's not a good thing. So what I think we're setting up for is a complete collapse with I say collapse, everything turning down with commodities. I mean, I know that the 3-year cycle and oil has continued to hold up, gold has continued to hold up, and so that we've had this like levitation that really hasn't gone anywhere. If you look at the chart, it's just kind of levitated, but at the same time, the cycle, the topping process has been underway with the commodity complex, and I think that's where we're at. And at the same time, we're seeing, I think, the building of the top in equities with what I think is the bubble top, and the bottoming of the dollar. And so it's like it's all in this transitional period, and has been for, like I said, 6 months now. But I'm not encouraged by what I see with gold.
What's going on with crude?
Crude has been, it continues to linger. There is no question in my mind when you look at, like I said, the longer term, the 3-year cycles and so forth. It tried to peak back in January and didn't quite pull it off. Didn't bite. And then there's been another push up, and so it's lingering. But I think when you look at it cyclically, there's still the building, if you will, kind of like turning that battleship, is still the building of these longer term tops in commodities.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.